Hello students, welcome back. This is Ms. Mercado speaking. This is a continuation of Chapter 6. This particular lecture is going to cover your homework problems dealing with Homework 6B. Please make sure that before you attempt your homework problems that you have read the chapter in full. There's a lot of wonderful examples, explanations provided to you in the chapter, so it is critical that you read the chapter, okay? So I'm just going to go ahead and I'm going to dive into some of the problems that you are going to be seeing in Homework 6B. I will not be covering every single problem, but I will be covering the majority of them. That way I can provide some guidance. Remember that Cengage also has resources. When you're completing your homework, you have on the top of your homework, you have several resources like the ebook. You also have some short show me how videos that the publisher has included in there that provide you some guidance. So this is supplemental to that. That way you can have a little bit better understanding, okay? In order for you to be able to understand what we're doing, it is very important that you read. I know I sound like a broken record, but reading is critical in my class, okay? So, I'm going to go ahead and I'm going to get started. This is a continuation, so by now you should have already read the chapter and be familiar with the content that we are covering. The first problem that I'm going to cover today is problem 6.3. Okay, so problem 6.3 reads, problem 6.3 has two requirements. I'm going to complete the first requirement first, and then I'm going to move on to the second requirement. Okay, so it says Cal Ruther, an employer, is subject to Fica taxes, but is exempt from FUTA and SUTA taxes. So for some reason, this employer does not have to pay federal or state unemployment taxes, and that's very important for when we do our payroll tax section. Okay, so this employer does not have to pay FUTA or SUTA. During the last quarter of the year, his employees earned monthly wages of $8,500, all of which are taxable. So they're letting you know that none of the employees have earned more than the amount or the cap. Okay, the amount of federal income taxes withheld each month is $1,040. They're asking us to journalize the payment of the wages. That's the first entry. And then the payroll tax on November the 29th. So we have two entries associated with this. First is recording the payment of the actual wages to our employees. And second is to record the payroll taxes that the employer is liable for. Okay, so let's start off with our payment of the monthly wages. Okay, this is the entry that we, the employer, has to record in our books to show how much we are paying our employees. Also, deduct from our employees certain taxes or withholdings that need to be withheld, and then cutting them the actual check of what they're actually going to take home and spend. Okay, so first we're going to have our wages expense. Okay, and depending on how they treat it, it could just say wages. I like to put the word expense at the end because it is an expense to the employer. So here we have wages expense, and our employees earned $8,500. Okay, this is an expense account. The normal balance of an expense account is a debit. Okay, now we need to figure out how much are we going to withheld from our employees' paychecks. There are certain taxes that each employee needs to pay, and before we give the employee their money, we make sure that we take away those taxes, so we, the employer, are responsible for remitting payment for those taxes. Okay, so we take the money out of our employee's paycheck, we put them in our temporary account, which is a payable account, and then at the end of a specific period, either a quarter or a month, whatever the case might be, you take the money out of that payable, and then you send it out to the different taxing authorities or entities. Okay, so the first tax that an employee is liable to pay is the Fica taxes, and we're going to put that into a payable account. And we keep our taxes separate. So this is for OASDI. Okay, and as you know, we've already been covering this for a couple of chapters. We calculate this by getting our wages times 6.2%. Okay, so let me get my calculator out. $8,500 times 6.2%. That's going to give me $527. Okay, so I'm going to take out of the employees' paychecks $527 for OASDI tax. Okay, the employee also has to pay HI taxes. Okay, so we're going to put those separate. So as we know, we get the amount of the wages and we multiply it times our HI rate of 1.45%. And let's see what that gives us. That's going to give me 123.25. So I'm going to take 123.25 for my HI. Okay. The employee also gets withheld the employee's federal income tax, and we're going to put that into a payable, and that amount is given to you. Okay, so there's no calculation given. The amount of the federal income tax withheld is $1,040. Okay. So those are the 3 deductions that we are being provided with, or we know that we need to deduct aside from any additional other items. So these are standard. Every employee has to pay OASDI, HI, and federal income tax. Now, employees can have additional deductions such as, like we've seen before, like garnishments for child support or for other creditors. They can have their medical insurance deducted from here, their dental, their short-term disability, anything that the employee has to or authorized to be deducted for. You'll see it here. Maybe you have a life insurance policy with your company, all of those are possible deductions. If the information is not provided, then we will always have OASDI, HI, and federal income tax. Those will be there every single time. Then depending on the employee, they can have additional deductions. No additional deductions were provided, so this is all we're going to deduct, what we're required to, OASDI, HI, and federal income tax. Now I can figure out how much cash am I going to pay my employees. How much are they actually taking home? Well, my employees made $8,500. I'm going to subtract the $527 for OASDI. I'm going to subtract $123.25 for HI. And I'm going to subtract $1,040 for federal income tax. So my employees are taking home $68,0975. Okay, that is how much cash I'm actually going to cut my checks for. Okay, this is what the employees are taking home. So the $8,500 over here, that's my gross pay. Okay, that's how much you make, or the employees made before deductions. And the $68,09 is the net pay. That's after deductions. Okay, now that is the first requirement. We are paying our employees. Well, how do you pay them? Well, you figure out how much did they actually earn. Your wages expense will always represent the amount that they earned before deductions. Then you deduct all of the different deductions. You put that money into the payable. That money does not belong to us. All we're doing is we're taking the money out of the employees' paychecks. We're putting them into a payable. And later on, we'll remit payment to the taxing entities for those amounts. And then last but not least, we have to pay our employees. How do you pay your employees? You pay them with cash. And you figure out how much cash you're going to pay them by getting your gross pay minus the deductions, and that will give you your net pay. Okay. Now we're going to do the payroll taxes. Payroll taxes are usually OASDI, HI, federal unemployment, and state unemployment. Now we have to be very careful in this problem. They're telling you that this employer is exempt from FUTA and SUTA. So we do not have to pay FUTA or SUTA taxes. So then we're only left with basically 2 taxes, okay? So what are we going to do? We're going to pay our payroll taxes, okay? How much? Well, I don't know yet, okay? But I know that my payroll taxes expense is going to be the first item, okay? Now I need to figure out my FICA taxes, okay? And this is for OASDI. Remember, OASDI and HI, the employee pays the 6.2% and the 1.45%, and the employer matches that. So they're also paying 6.2% for OASDI and HI of 1.45%. Okay, so we're going to get the 8,500 times the 6.2%. And we had already calculated that up here, so I'm just going to do the same. It's 527. That doesn't change. And then we have FICA taxes payable, HI. And then we have the 8,500 times the 1.45%. And that gives us 123.25. Okay. So in this case, the employer only has to pay these 2 taxes. They're exempt from FUTA and SUTA. So now I know that I need to figure out what is my total payroll taxes. Well, the employer is going to pay $527 for OASDI and $123.25 for HI. So the total payroll taxes is $650.25. Payroll taxes represents an expense to the company. It's not only costing you, whenever people say, well, I'm going to pay my employee $25,000 a year. Yes, that's how much you're going to pay him in wages. But on top of that, you are responsible to pay certain payroll taxes. Okay, that needs to be factored in so you can calculate the total that you're actually paying out for each individual employee. This is an added cost for having an employee. Okay, that's why a lot of small companies choose not to hire their employees as actual employees, but rather they like to label them as contractors. That way they don't have to pay these payroll taxes. Okay, this is only paid for actual employees of the company. Okay, so this is your payroll entry. You're going to debit payroll taxes of $650.25, and you're going to credit your FICA taxes payable OASDI for the $527 and FICA taxes payable HI for $123.25. Now let's look at requirement B. Prior to posting the November 29th payroll transactions, FICA taxes payable OASDI, FICA taxes payable HI, and employees' federal income tax payable had zero balances. So what are they telling us here? They're telling us that before this entry that we had in our books, those three accounts had a zero balance. Okay, so they don't have anything in it. They're zero. Ruther must pay the FICA taxes and income taxes withheld on November the 29th payroll. So now they're asking us that we have to remit payment to the different taxing entities on November the 29th. They're asking us to journalize the electronic transfer of the payroll taxes on December the 16th. So now what we need to do here is we need to figure out how much are we going to pay or how much are we going to remit in payment for my OASDI, HI, and federal income tax. Well, before that, we need to figure out, okay, if you notice, when we take money out of the employee's paycheck, we put the money into payable accounts. Those are credited, okay? When we, the employer, calculates payroll taxes, we expense the amount of the payroll taxes and we credit our payable accounts. So all of our money is sitting on a payable account, okay? So maybe I can do a little T account here. Bear with me. Let me see if I can draw one out real quick. Okay. Let me see, like that. Okay, so this is gonna be, I'm gonna need 3 of these. So I'm gonna do copy 1, copy 2, copy 3. Okay. So the first one is gonna be my FICA taxes payable, and this is OASDI. Okay. The second one is gonna be my FICA taxes payable HI, and then the third one is going to be my employees federal income tax payable. Okay, those are the 3 accounts that we have right here that they're asking us to record the transfer of the payroll taxes. Now let me see if I can make these a little bit bigger because they're kind of small. Let me see. That didn't work. It looks kind of ugly. I'll just keep it like this. Okay, let me just zoom that in a little bit. Okay, that way you all can see my calculations down here. Okay, I think that will work. Okay, so I zoomed in. I'm going to focus here on this information. Okay, so now I'm going to go ahead. The problem said that our taxes, our 3 accounts had a zero balance. Okay, now over here we recorded some entries. And let's see what we recorded to FICA taxes payable OASDI. We recorded a credit of $527 here, and we recorded another credit of $527 down here. I'm going to highlight these, that way you see what I'm talking about. So I have 2 transactions posted to my OASDI account. Okay, FICA taxes payable OASDI got 2 credits. Okay, so I'm going to put those 2 items down here. So I've got $527 and $527. Okay, So right now, what I have on my account is I have, let me get my calculator, 527 plus 527. So I've got $1,054 sitting in this account, okay? Now let's do the same thing for HI. Let's see how much money we have in HI. In HI, let me get another color right here. In HI, we have 123.25 and 123.25, okay? So I'm going to add those two together down here. They're both credits, 123.25, 123.25. So if I add those together, let me see. Move this out of the way. 123.25 plus 123.25. I have 246.50. So I have 246.50 sitting right here. So these are my balances. Okay, let me highlight these. These are the balances that I have on my account right now. I deposited money into these accounts. That's what's sitting there. Okay. Now for federal income tax, I only have one entry. Okay. Of 1,040. Okay. So I have 1,040 sitting over here. And we don't have to do any calculations because we just have one entry. So that's my balance. Okay. So I've got 1,054 sitting on my OASDI. I've got 246.50 sitting on my HI, and I've got 1,040 sitting on my federal income tax payable. Now they're asking you to take the money out of these accounts and make a payment on December the 16th. Okay. So let's make that entry. Okay. So what am I going to do first? Well, I know that I need, which one are we doing, 6-3? I know that I need to pull money out of these accounts, okay? So I need to take money out of these accounts. So how much money do I have sitting on my OASDI? I have 1,054. So I have a credit of 1,054. So now what I'm going to do is I'm going to do Fica Taxes Payable, OASDI, and I'm going to take money out. When you take money out of the account, you debit it, okay? I'm going to take out 1,054, okay? I'm going to take out the money that I have sitting on my HI account, which is 246.50, okay? I'm going to take it out. And I'm going to take out my money that I have sitting on my employee's federal income tax payable of 1,040. How do you pay someone that you owe money to? You pay them with cash. Okay? So now you're going to submit the money electronically. So they're going to deduct the money from your checking account. Okay? And the total amount that we are going to pay out is 1,054, 246.50, and 1,040. That's going to be 2340.50. That is how much cash is going to be taken out of your account. Okay, so now what went on here? What we're going to do is we're going to take the money out of our entry of our accounts. So when we put money in, we credit. Okay, so let me put here payable accounts. When you put money into account, you credit. When you take money out of account, you debit. Okay? That's how they work. Okay? That's how these accounts work. Okay? So, when we put money in, we credit the account, which is what we have right here. Now we're taking money out. So what happens when you take the money out? Okay? Well, I'm going to take money out. And now this account is going to have a zero balance. This is when I take the money out. Now this account has a zero balance. Okay? I take money out of here by debiting. Okay? Now this account has a zero balance. Okay. I no longer have any money. I took money out of my employees and my employer payroll taxes and I put it into the account totaling to 1,054. I took the money out and sent them the money electronically. Okay, so these accounts will now be zero. Okay, the same thing over here for my federal income tax payable. Okay? I take the money out. Now this account is back to zero. Okay, so if you notice, you put money in, you have a balance, which is the one in yellow. At the end of the month or whenever you have to submit payment, you take the money out, which is the light blue one. Okay, and then you're left with zero. Okay, and then you'll continue doing that the following month. You put the money in, then you take the money out, and you're back to zero. Okay, so this is how you make a payment. Okay, for the taxes that you have collected. You have collected $1,054 in taxes for OASDI, $246.50 for HI, and $1,040 for federal income tax. That is how much you withheld from either the employee's paycheck or that's the payroll taxes for the employer. And then just cash it out. What's going to happen to your cash? Well, it's going to go down because you're sending them the money. Okay? So where are you getting this cash from? From these accounts. Okay? So hopefully it's not very complicated for you to understand. I like using T accounts down here. That way you understand what's going on. You put the money in, a credit. All of them will be credit balances. These are liability accounts. Liability accounts. Liability accounts. Okay. Normal balance is a credit. Okay. So when you credit, a credit increases the balance. Okay. A debit decreases the balance on the account. Okay. So this is how liability accounts work. Anytime you see the word payable, the normal balance of a payable account is a credit. The credit increases the balance. The debit decreases the balance on the account. Okay, and this you should have learned in your introduction to accounting class. This is just basic accounting principles that we have going on here. Okay, that come into play. Okay, but going back to the problem, this is the entries that would need to be done. The first two entries. The first one is to calculate your monthly wages. The second one is to calculate your payroll taxes. And then the third one, which is requirement B, is to actually remit payment of those taxes to the different taxing entities. Okay. Okie dokie. So now we're going to move forward with problem 611. Okay. 611 is short. Sweet and short. I like these kind of problems. Okay. So it says, on December the 31st, Karmansky Company needed to record its accrued wages for end of year. If December the 31st is a Tuesday, then Karmansky Company must account for 2 days of wages. The company operates in a 5-day work week. The prior week's gross pay was $32,650 and the net pay was $21,330. Okay. So we are being asked to journalize the adjusting entry to be made December the 31st for the accrued wages. Now, what does all of this mean? Okay, what happens is at the end of the year, you have to record all of your expenses up to that last day of the year. Okay? In this case, the end of the year, December the 31st, fell on a Tuesday. Okay? So we had employees that worked Monday and worked Tuesday, but they're not going to get paid till the following week, maybe on Friday or whenever the case might be. Okay? So we're not going to cut checks till the following year, but we need to account for those 2 days of wages for Monday and Tuesday in the correct year. So an accrual is made. Okay, so we are going to accrue because we need to record all of our expenses when they are incurred. These 2 days were incurred in this year, but we're going to pay them the following year. Okay, so let's put some years to it because like this it just confused me. Okay, so let's say we are dealing with December the 31st, 2019. Okay, so as of December the 31st, 2019, the employees had worked Monday and Tuesday. Okay, so let me draw it here. Okay, so Monday and Tuesday are December 30th and 31st, 2019. Okay, And then we have Wednesday, Thursday, and Friday. Okay. This is going to be January 1, 2, and 3, 2020. Okay. So you see, we need to figure out how much am I going to record in my books for what they worked and earned in the year 2019 and then 2020. Okay. We need to make sure that we account for the expense for wages for those 2 days that were actually earned, and those wages were actually earned in the year 2019. Even if we pay them in the year 2020, we need to make an accrual because those wages were actually earned in the year 2019. Okay. So we need to figure out how much we are going to accrue for those Monday and Tuesday, those 2 days in the year 2019. Okay. So first, I'm going to start off. We always do our calculations based on our gross pay. Okay. Gross pay is how much they actually earned. Okay. Net pay is what they take home. Our accrual is not going to be based on what they take home. Our accrual is going to be based on what they actually earned. And according to the problem, our employees had earned the prior week $32,650. Okay. I don't know how much they're going to earn this week, but I'm going to run with what they had last week as my guide. Okay. If any minor adjustments need to be made at a later point in time, they'll be made. But for now, this is the information I have. So I'm going to run my entry based on what the data that I have. So as last week, these employees earned $32,650, and they earned this in 5 days. Okay. So let me see how much they earn per day. So 32,650 divided by 5 days, that gives me $6,530. Okay. This is my daily earnings, or the daily wages. Okay. That's how much my employees make per day. Okay. So it says here that the employees worked, the last day of the year was on a Tuesday, so that means that they worked Monday and Tuesday in the year 2019, okay, which is what I need to accrue for. Okay, so I'm gonna get my daily accrual, or the daily wages, the daily wages, which are the 6530, and I'm going to multiply by the 2 days of the current year. This is what they made in 2019. They worked Monday and Tuesday, the 30th and the 31st. So they made in those 2 days, 6530 times 2 days, $13,060. This is the amount that I need to accrue. Okay? I need to put that money aside for when we pay our employees in 2020, but that expense for the wages of $13,060 needs to be recorded in 2019. Okay? So the entry that would need to be done to record this accrual, okay, would be, we would debit, let me make this a little bit smaller, we would debit wages expense, and this represents the amount of actual work performed in 2019, which we calculated it to be $13,060. That's for 2 days. And I'm going to put that into a payable account. Okay. So I'm setting $13,060 aside for when we pay our employees Monday and Tuesday for the following week. Okay. So my wages expense, this will allow the company to recognize the expenses actually incurred in 2019. My employees worked Monday and Tuesday. That represents $13,600 of wages expense for me that specific period. Okay. I'm not going to cut a check yet to my employees. I'm going to wait till Friday to cut them a check. Okay. So on Friday that you cut them a check, you have $13,060 into my wages payable account. So you can take out of my payable and pay the employees for the Monday and the Tuesday that they worked the prior year. Okay. Accruals are very important. Auditors look at that very carefully when you close your books. You need to make sure that you do accruals for all of the expenses that actually occurred that period. regardless if you've paid them or not. Okay? If you haven't paid them or will not be paying them, you put the money into a payable account. That way you have the money sitting there the following year or the following period when you do decide to pay. But the actual expense or revenue or whatever the case might be needs to be recorded in the period it is incurred. Okay? So that is the entry that would need to be made. First, you calculate your daily accrual or your daily wages, which is your gross pay divided by the number of work days. That gives you your daily wages of $6,530. Then you figure out, well, how many days did my employee work that year or that end of period? Well, they worked for 2 days. The company must account for 2 days of wages. So I need to get my daily wages times the 2 days, and that gives me my accrual amount. Okay? So hopefully you all picked up after this. Very easy calculation. Okay? Now, we move on to 612. Okay? Kelsey Gunn is the only employee of Arsenal Company. His pay rate is $23 per hour with an overtime rate of 1.5 times for hours over 40 in a work week. For the week ending March the 31st, he worked 48 hours. Now they're asking us to calculate his gross pay for the week using the overtime premium approach. Very important, okay, to calculate the overtime pay. Since the company holds back 1 week of pay, Gunn will not be paid until April the 7th. What adjusting entry would the company make in order to record Gunn's salary in the first quarter of the year? They're asking us to calculate the regular pay, the overtime premium pay, the gross pay, and the adjusting entry. Okay. Now, for the overtime premium approach, you have to go back to Chapter 2 and review the information there. Okay, specifically, page 223 deals with the, you have examples there and it explains the overtime premium approach. So I'm going to let you all go back and do some reading on Chapter 2. Okay, okay, so now I'm going to start. Okay, the first thing that we have to calculate is the regular pay. Okay, since we are using the overtime premium approach, what we do here is we get, okay, let me put my parenthesis. We get the total number of hours worked, which are 48 hours, and we multiply it by the rate of pay, which is $23. So in this case, when we using the overtime premium approach, we calculate it based on the entire number of hours worked, okay, which are 48. So I'm going to get my calculator. So this employee worked 48 hours at a rate of $23. That's $11.04. That is going to be my regular pay. Okay, let me put a little box here, that way we know that is my answer for the first one. Okay, my overtime premium pay. Now before I get my overtime premium pay, I need to get my overtime rate. Okay, so for your overtime rate, you're going to get your $23 an hour and you're going to multiply by half. Okay, that is how we calculate overtime using the overtime premium approach. So $23 an hour times 0.5, that gives me $11.50. Okay. That is my overtime rate, $11.50. Now that I've got my overtime rate, I know that this employee worked 8 hours of overtime. He worked 48 hours, 40 regular pay, 8 overtime. Okay, so I'm going to get my 8 hours, and I'm going to multiply it by my overtime rate of $11.50 that we just calculated below. And let's see how much that gives us. 8 hours times $11.50. That gives me $92. Okay. Okay. Now we are being asked to calculate the gross pay. So the gross pay is going to be your $11.04, which is your regular pay. Let me just put here, sorry. We're going to get our regular pay of $11.04 plus our overtime pay of $92. Okay, so let's see how much that equals. That's 1104 plus 92. That's 1196. Okay. So that is the gross pay. That is how much the employee is going to be paid gross. Okay. Now we need to do an adjusting entry. Okay. It says here that the employees worked for the week ending March the 31st, but they're not going to get paid until April the 7th. So if you notice, March the 31st is 1 month, it's one period. April 7th is a separate period. We need to record this entry because this is the employees worked and earned this money during March of the current year. Okay, they're not going to get paid till April, but these wages earned have to be recorded in March. Okay, so how are we going to do? We're going to set up our accrual. We're going to debit salary expense. Okay, and these employees made $1196. Okay, and then we're going to have salaries payable. Okay, we're going to put that money into a payable. That way in April, when we're actually cutting checks, the money's already sitting on our payable, we just take it out and pay our employees. Okay, so that is how you do an accrual here. Okay, what's happening is we're recording the expense in March. Okay, and we're realizing, you know what, we're not going to make. Yes, our employees worked during March, but they're not going to get paid till April. Okay, let's put the money aside in a payable account. That way when April the 7th comes in, we just take the money out of the payable by debiting the account, and then we credit cash and issue out the payment to our employees. Okay, we have to do this to recognize the expense. That is the whole point. We need to recognize the expense in the period that it incurred. When did my employees work? They worked in March. Okay, that is why we have to record the expense in March. Okay, so that is the entry that would need to be recorded March the 31st to show that my employees worked and they earned $1196 during the month of March. Okay, so that is problem 612. Okay, and the reason we use salary expense is because here they said record Gunn's salary. Okay, it would either be salary or wages, whatever the problem specifies. In this case, we use salary because that's the information provided in the problem. Okay. Last but not least, we have problem 614. Okay, so it says at the end of April, Hernandez Company had a balance of $37,910 in the vacation benefits payable account. So what happens is the company accrues for what they think they're going to be paying out in vacation benefits to their employees. Right now they have $37,910 sitting in that account. Okay. During May, employees earned an additional $2,790 in vacation benefits. But some employees used vacation days that amounted to $2,050 of the vacation benefits. The $2,050 was charged to wages expense when it was paid in May. What adjusting entry would Hernandez Company make at the end of May to bring the vacation benefits payable account up to date? Okay. So let's look at the facts here. Okay. So the facts are, as of end of April, okay, our vacation payable account has $37,910. Okay, because it is a payable, it's a credit balance. Okay. Now, during the month of May, okay, employees earned vacation of 2,790. Okay. During May, employees used vacation of 2050. Okay. That is what the problem says. Sorry, extra 0, 2050. Okay. That is the information being provided to you in the problem. Okay. Now, they're asking us for an adjusting entry. Okay. What adjusting entry does the company to make at the end of May to bring the vacation benefits payable account up to date? Okay. So the adjusting entry, let me make these bigger. Okay. So the adjusting entry would be the vacation earned of 2,790 less the vacation used of 2050. Okay. So the amount of the adjustment would have to be, let's see, 2,790 minus 2050, $740. That is the amount of our adjustment. Sorry. Okay. That is the amount that the adjusting entry has to be for. The vacation earned minus the vacation used. Our entry or our vacation payable account is going to increase by $740. Okay. Well, how do we do that? Well, we have an account called vacation benefits expense. This is an expense account that we keep track of how much we, the company, are investing into our vacation for our employees. Okay, that's an expense account. That gets debited to $740. But what's going to happen now? Well, I'm going to put that money into my vacation payable account. Okay, so I'm going to credit vacation benefits payable. I'm going to credit that. Payable account is a liability. The normal balance is a credit. So I'm going to credit my benefits payable account $740. Okay. So my vacation benefits payable account is going to grow by $740. Okay. So that is the entry that we did. This is how we calculate it. It's our vacation earned minus the vacation used. That is the amount of the adjustment that needs to go to our vacation payable account. Okay. Now, these are 4 of the problems in your homework that you're going to be seeing. This is the last chapter that we're covering. Following this, students are going to have some projects that they're going to be working on, some comprehensive projects dealing from whatever was learned from chapters 1 through 6. So this is the last content-related presentation that I'm going to be doing. Okay? Please, by now we are finished with the content. I will be providing the review for your final exam. That way you can start preparing. If you have questions about any of the problems on your review for your final, please get with me before finals week. That way I can be able to provide any clarification you have, answer any questions you might have. Once finals week begin, I will not be answering any content related questions. Okay? The solutions to your homework become available the Monday after the assignment closes. Your assignment closes on Sundays. The solutions become available the following Monday. That way you get back, you can go back and review your solutions. Okay? Please study for your final. Please, if you have questions, reach out to me via Blackboard preferably. That way I can get those questions answered and you can be able to get clarification on anything you might have. Okay? So that is it for this lecture. Until next time. Thank you.